Good Monday morning from Yahoo Finance's New York City headquarters studios. I'm Yahoo Finance Executive Editor Brian Sozzi. There's no shortage of big investing news right out of the gate today before the bells on Wall Street even kick things off officially. And there are those bells on Wall Street getting trading underway. Scott's toilet paper maker Kimberly-Clark will aim to clean up the mess over at Tylenol maker Kenvue. Kimberly-Clark said this morning it will acquire Kenvue for $48.7 billion. That's total enterprise value. This after the Trump administration linked Tylenol to autism in September, which sent the stock plunging to fresh lows. The company has also seen a sizable leadership shakeup thanks to efforts from activist investor Jeff Smith at Starboard Value, who will be a key guest for us at our Invest event on November 13th. This will mark Kimberly-Clark's initial foray into the pharma space in Tylenol, but will also gain access to other top consumer brands such as Listerine mouthwash and Neutrogena lotions. Meanwhile, the government shutdown rages on, and Tesla fans are eagerly awaiting for a vote on Elon Musk's $1 trillion pay package later this week. Not to mention, we will get earnings from Momo names and Palantir and AMD. Let's get over to NASDAQ and check in with Brooke DePalma. Brooke, busy morning here.
Good morning, Brian. Happy Monday. What we're seeing here early at the beginning of this trading session is the NASDAQ leading the momentum here, up about 1% at the open. And behind that, we do have the Dow just about flat and the S&P 500 up about 0.5%. So lots of momentum going into this week. I also do want to point out that this would have been the week where we would have got that latest jobs report this Friday. But since we're not getting that, there are some key reports that Wall Street has their eye on, including the results from ADP. Right now, we have TD Cowen, TD Securities predicting that October added about 45,000 jobs. We're also getting some reports from ISM as well as jobless claims. So definitely keep a lookout for that. And on top of that, too, at the open, I do want to quickly hit on the momentum that we're seeing behind Kenvue after Kimberly-Clark announced that they plan to acquire Kenvue in that $48.7 billion deal. We have Kenvue up about 15%, nearly up about 13%, 15%, really hovering around those higher levels, while Kimberly-Clark is moving lower at the open. Right now, that stock is about 104, hovering at 105, but certainly lots of momentum heading into this week. We also have the Tesla shareholder vote that I know we'll hit on as well, but really investors looking for any insight into this current state of this U.S. economy and also into this booming stock market that we continue to see. As Trump said on his interview at 60 Minutes last night, once again, we hit record highs on Friday, and it seems that momentum's moving into this week.
All right, thanks so much, Brooke. Really appreciate it. All right, while the stock market is trading at records, let's keep in mind the U.S. government is still closed. Goldman Sachs is out saying today the shutdown may last a few more weeks, but could ultimately end before Thanksgiving. They point to missed air traffic controller and airport screener pay on October 28th, raising the prospect of travel delays. They also note the failure to pay food stamp benefits on time from November 1st might pressure lawmakers to reach a solution. President Trump didn't appear to be in a hurry to end the shutdown in a new 60 Minutes interview Sunday night. Trump touted the stock market being at a record, new investments in the U.S. helping to support the economy, and warned the Supreme Court shooting down his tariffs could hurt the U.S. economy. The Supreme Court will begin debating Trump's tariffs on Wednesday. All this against the backdrop of November 5th being the one-year mark since Trump won the presidential election. The S&P 500 has surged 18% since Trump's November 5th win, ending October on a 6-month winning streak and at an all-time high. So lots going on here over the past year, to say the very least. Here in the opening bid roundtable, Tom Essay, Simmons Report research founder, alongside Yahoo Finance senior reporters Brooke DePalma and Nesferre. Tom, I can't believe it has been a year, but we are coming up on this mark. As you look back over the past year, what has been the biggest surprise to you as someone actively involved in these markets?
Good morning, Brian. Thank you for having me on. To me, it's the market resiliency. I mean, it truly is the Teflon market. If someone had told us a year ago that the Trump administration was actually going to go through with all of these reciprocal tariffs, with threatening 100+% tariffs on China, all of these different trade metrics, and the stock market, while volatile earlier this year, just kept sailing away and is at new highs and surging, I think all of us would have been a little bit skeptical. But yet again, this market has shown it is Teflon. Nothing can stick to it, and clearly the bulls are still in control.
Tom, is there more going? So to your point, look, it has been Teflon. We have had tariffs are still in place. We have an ongoing government shutdown. Why? Why is there something underneath the surface of this market besides AI that keeps investors just so optimistic?
So I think it's employment. Obviously, AI is integral to where the S&P 500 is, especially. And that is the linchpin. But as I look beyond the surface, it's employment, right? As long as people have jobs and can get jobs, then they can really weather a lot of uncertainty, inflation, things like that. And the fact that the labor market has stayed so strong, I think, is sort of the unsung hero of this market rally.
Now, Inez, I hear everything Tom is saying, but look, I mean, a large part of this rally is based on AI optimism. Every time OpenAI comes out with another deal, that company sees the potential to raise even more money at a higher valuation. The companies it works with, their stock has tended to trade up.
Yeah, it's this market is being led by AI mostly, and you have analysts that have been talking about the markets going higher because of AI. Yes, you've had the Fed easing, but AI is really the driver here. I will say that over this past year, just looking at this past year, the stunning rally from the April lows has been so notable, where the administration basically shifted to, we are going to spend our way out of this issue and we are going to invest in all the sort of touch points of energy, of AI, of industrial. I mean, if you look at every single sector that is up right now year to date, it is what the administration has also been looking at. So the chip sector, data centers, electricity generation, all of this is what has been leading this market. And of course, AI being the fundamental theme throughout all of this.
Tom, let me get back to you. Why can't this continue into next year? If tariffs aren't going to take down the market, if the shutdown's not going to take down the market, if higher valuations aren't going to take down the market, we have the Fed out there likely to cut rates a couple more times next year. What hits things here?
Yeah, so as we think about what goes wrong, I think that the simplest way to describe it, it's not that people were wrong to be worried about all these tariffs or policy uncertainty. It's that they expected it to be negative too soon. So the economy is still facing headwinds. The unemployment rate is rising. We are seeing economic metrics come in, but it's not reacting to tariffs and trade uncertainty as fast as everybody expected it to. But just because it doesn't do it as quickly, it doesn't mean it's not going to happen. And I think that, to me, as we look at 2026, I can start painting a case that the stock market is starting to make the economy look better than it really is, because AI is powering the S&P 500 higher, while the rest of these sectors, while not bad, we're starting to see little cracks. And I think that's a big thing to watch in 2026.
Brooke, let me bring you in here. To Tom's point, there are cracks emerging in this economy. I look at what Chipotle said. Starbucks results have started to improve, but still not blowing anyone's minds. We have the SNAP payments now missed. Now the retailer is going to report in a few weeks. I'm seeing cautious notes from Target in my box. I have a story on Yahoo Finance right now looking at Target stock trading at a 52-week low. So it's not all great out there economic-wise.
Brian, I think a key indicator on really how this low and middle income consumer who has been struggling, as all those reports hinted to, will become clear when McDonald's reports this week their latest quarterly earnings. We're certainly keeping a lookout on that, the return to U.S. same-store sales growth, the momentum that they have behind these key value plays, and really leaning into that idea that they can hold and gain back and maintain their value leadership in this sort of environment. And even what we heard once again within that 60 Minutes interview yesterday evening is President Trump really touting that overall grocery prices have gone down. Sure, beef is still bad, but we got egg prices down. These are the key issues that the everyday American, particularly those low and middle income Americans who really have been struggling in the backdrop, really rely on. He's touting that they've come down, but there are some key moments here that we're hearing within these reports, particularly for young people who aren't spending like they did even just last year, and importantly, a few years ago when that stimulus money was really flooding through this economy as well. Tom,
why do you think the market ignores stuff like this?
Because of AI, mostly, and because there's so much bullish momentum. I mean, you guys see this every day. I mean, OpenAI pledges to spend hundreds of billions of dollars with one of like 6 companies, and they just kind of rotate, saying they're going to spend hundreds of billions more, and they just keep going around. All this money has to be acquired, right? All this has to be sourced over the coming years. Yet the market trades as though it's a done deal. And so I think that this constant barrage of AI enthusiasm, optimism, is really helping. It's almost a distraction. And I'm not saying that it's not going to happen and AI isn't going to be the greatest thing in the world. But I think right now these headlines, which in reality don't actually mean much from a bottom line standpoint, are helping to keep investors focused on that excitement. And because of the government shutdown, we're not getting economic data to really provide a counter case. And so I think that it's just keeping people very optimistic.
And as outside of AI, if you go back and if we were having this conversation on November 5th and someone made a prediction that gold prices would be up at a record at the same time the stock market is at a record, it would be hard to believe. I can get cryptocurrency. President Trump has been very friendly to the cryptocurrency industry, but gold has been the surprise move for me over the past 12 months.
Yeah, and it's up 50% year to date. It's still around the $4,000 level. Look, asset holders have done well in this economy. If you hold stocks, if you hold gold, if you hold metals, even if you hold Bitcoin since Trump was elected, asset holders are doing well. So when we talk about this K-shaped economy, yes, it's a K-shaped economy because the higher income ones are the ones that are doing most of the spending and are the ones that are sort of keeping everything afloat. If you listen to what Visa said last week, their high income spenders are the ones that are driving everything forward. And we've seen this over and over, and we're seeing it when we talk about these earnings report and where the executives are basically pointing out where the spending is coming from and where it's not.
Tom, what are you telling your clients right now, and what questions are they asking you? Is it as simple as saying, hey guys, you've probably made bank this year off of all AI trades, just stay the course? I mean, there's no sign that trade is cracking yet.
So one thing I'm very surprised about by my subscriber base, which is predominantly advisors and investors, is people are very skeptical that this can continue. And it's just sort of a simple idea of the pandemic happens, stocks go up 25%. Interest rates go surging to multi-decade highs, stocks go up 25%. The Trump administration kicks the bucket over on global trade for the past 40 years, stocks go up 25%. And you're getting a lot of people starting to get this late 90s kind of vibe, obviously older investors. They are concerned that the market is essentially ignoring everything and just saying, well, it's just all going to work out great. And so far it has. But despite the very strong performance, it's almost that it's so strong, it's starting to make people nervous.
Do you see any positioning in the options market, Tom? I know you follow options. Is anybody betting against a short-term pullback at all? Anything you could see, any red flags?
No, actually sort of quite the opposite, right? It's sort of all systems are go. And if you look at it last week, I mean, we had these three kind of potential speed bumps. You had the U.S.-China trade, you had the big tech earnings, and then you had the Fed decision. The market sailed right through them. I get that Powell was more hawkish but nobody believes they're not going to, cut rates either in December or January. So that's where the concern is coming from. Everybody's on the same side of the trade. And Brian and everybody knows that when everyone's on the wrong side of the trade, it usually does pay to get a little cautious. Fair
enough. All right, Tom, Brooke, and as y'all sticking with me, we have a lot more to get to on this show. But we're counting down to a big day here at Yahoo Finance, our annual Invest event. It's going to be as huge as Tesla's shareholder vote on Elon Musk's pay package on November 6th, maybe bigger on November 13th, starting at 8 a.m. We've got a special full day of live global coverage of the key themes driving this market, AI, crypto, and much more, with the top people in corporate America you'll want to hear from. We have heavy hitters in the crypto space, including Strategy Executive Chair Michael Saylor and Robinhood CEO Vlad Tenev. Palantir CEO Alex Karp will weigh in on all things AI. Personal finance legend Susie Orman and the Shark Group CEO Damon John are also joining us with tips to help you build your wealth. Don't miss Yahoo Finance Invest, November 13th. Save the date and tell all your friends right now. Welcome back to Opening Bid. It's almost Black Friday for the nation's retailers, believe it or not, which so happens to coincide with the release of third quarter financial results for many in the sector. City analyst Paul Edgway is staying buy rate on Walmart stock into mid-December earnings. He expects an earnings beat and for the company to lift its full-year earnings guidance. Says Edgway, quote, "We believe the company had a strong back-to-school season and will be optimistic about the holiday. Although market expectations are high, we believe the third quarter will be a reminder of their favorable position." All right, time to fire up my stock of the day, and how can it not be Tesla? Tesla shareholders will decide this week whether the automaker should award CEO Elon Musk stock worth almost, believe it or not, $1 trillion. Wow, if he achieves a host of very ambitious goals over a 10-year period. One of those goals, deploying 1 million humanoid robots and boosting the company's market cap to $8.5 trillion from $1.5 trillion today. The deadline for voting is 11:59 p.m. Eastern Time on November 5th, just before Tesla's annual shareholder meeting on November 6th. Judging by the stock's momentum in the last 5 sessions, it looks like investors are betting Musk stays as CEO and could spend many more nights sleeping on the factory floor, churning out electric cars and robots. Still with me on the opening bid roundtable, Tom Essay, Brooke DePalma, and Inez Ferre. Tom, $1 trillion, a lot of money. Should shareholders just give them that money and let them go to work?
Yes, they should. I mean, again, you see the headlines and you're like, oh my God, are they going to give him $1 trillion? Well, they're only going to give him $1 trillion if he hits incredibly, aggressive metrics, as you referenced in the intro. I mean, they should give him $1 trillion if he has to generate $7 trillion of market cap and benefit to the shareholders. Sure. I think that Musk is integral to Tesla. I think that if you're invested in Tesla, you're not invested because it's a car company. It's a tech company. It's a future company. It's robo-taxis. It's robots. And he is, a modern day Thomas Edison, and so keep him on. You gotta go with it at this point, I'd say. And so, yeah, write the check and let him do his thing.
All right, so Tom, let's say this passes, Elon gets his loot. If you had $1,000, do you put it to work in Tesla after this vote and after it theoretically could be approved? You're gonna have a very motivated Thomas Edison trying to change the world via robots and secondarily EVs and AI. Why wouldn't you want to hitch your ride to something like that?
Yeah, I agree. I mean, I get he's mercurial and the headlines and things like that can be a distraction, but the record is pretty good. When you invest alongside Elon Musk, you typically make a lot of money. Yes, it can be a bumpy ride, but we are talking about society changing technology that, oh, by the way, he's already brought to us. And so I would invest that $1,000 with him.
Inez, I, of course, wasn't around. Neither were we when Thomas Edison was alive and doing his thing. But look, this could be a big moment for the retail fan base that actively has supported Elon Musk, no matter what has happened to the company.
Yeah, Elon Musk is synonymous with Tesla. There is no Tesla without Elon Musk. You saw what happened to the stock price when Elon Musk was more involved with politics than when he had that mini fallout with Trump, then when it got better. I mean, when he's more involved with the company, you see that the stock does better. And that is what investors want, is Elon Musk at the helm of the company. So I'm agreeing with Tom here that it is really all about Musk. And this is also about controlling the company and where it goes. And this is why investors, the retail investor, really goes for the stock and will ride it throughout. And so, yes, I do think that he'll probably get the vote that he's looking for.
Brooke, if this gets approved, I happen to be of the view that we could see a major rethink of already high compensation packages for CEOs. If you're, let's say, Doug McMillon over at Walmart, you see this package gets passed. Well, why isn't Doug McMillon worth $500 billion? He's added tons of value to Walmart over the past decade he's been leading the company.
Brian, last year when we saw so much C-suite turnover, this was a mega discussion, especially when we saw Brian Niccol get picked to go to the Starbucks helm, and we saw other leaders start to take shape. There were some big pay packages that were announced last year, and it was certainly a big focus in order to get these top talent players at the helm of these companies, mostly that are leading either a turnaround, or B, trying to push forward and become a standout in this sort of competitive AI industrial, whatever you want to call it, race that's currently underway. And so to be determined on whether or not we see these mega pay packages pay out, but certainly it definitely keeps these key players at the helm for longer. And also within those stock compensation plans, we also know that that direct tie in there certainly is keeping these players really looped in on how exactly they plan to turn around the companies.
Go think, the CEO being undervalued for a $50 million pay package. Big tech is getting hooked on debt to fund its sprawling AI ambitions. Alphabet is returning to Europe's debt market for the second time this year. Total sales expected to be at least the equivalent of $3.5 billion. Meta sold $30 billion of corporate bonds last week, the biggest offering of the year in the U.S. dollar market. My question of the day is this: are these debt sales bullish or bearish for the broader stock market? Tom, what say you?
I'd say they're bullish in the short term as long as it sticks to these major mega cap companies. What I don't want to see is that a lot of smaller AI tech companies that need funding just crushing the corporate bond markets with offerings, because there's fervor over AI and they're going to get money. But my worry is that AI and the rollout, the build out of AI infrastructure is already sort of seeping to different sectors of the economy. And if all of a sudden there's disappointment in AI adoption, well, then now do we have a debt problem on top of the other problems we're going to have with the removal of sort of this private stimulus in AI infrastructure? So I hope that it sticks to the big guys. If it funnels down, I think it's actually quite a negative.
Inez, you worried about this?
I mean, of course, when there's debt involved, this is what the bulls have been talking about, is that these are very healthy balance sheet companies and that they have the cash, et cetera. But this may be a smarter way to fund AI, is by doing it through bonds. So it may be a smarter way for them. But as Tom says, if it goes to the smaller players that aren't as healthy, cash healthy, then maybe that's a concern.
Brooke, the bottom line is here, these companies, they have to deliver on their AI ambitions.
Absolutely. And that's what we're hearing right across the street, is that they need to ultimately see a return on these mega investments. For example, take Meta. They made that $30 billion debt finance deal to build out that Louisiana AI data center. And that's not going to happen for a few years. And really the fear is that it doesn't actually end up coming to fruition. Maybe this AI boom doesn't play out as much as investors are right now anticipating. And what we heard, not to bring up the 60 Minutes interview again, but this was asked, this was a question. As we head towards this bubble, what if the AI boom that we're seeing doesn't necessarily turn out the way that investors plan right now? President Trump sort of signaled a calm tone and said that the government is able to sort of offset any concerns that they might have here. He went on to say that we're solid, we're strong. Even if it doesn't go well, we are still a strong country. And so certainly there are concerns here that these billion-dollar data centers, that all this investment to build out these energy structures doesn't actually play out, but investors trying to stay calm and keep on in this sort of environment.
Tom, last word to you. Meta or Alphabet, your favorite, and why?
Alphabet. I think that Meta's amount of money they're spending on AI is making me nervous. I'm having flashbacks of the metaverse. I like Alphabet. I feel like they're a little bit ahead in the AI game, and their core business is a bit more diversified.
My favorite roundtable. Always great to see all three of you here. Tom Essay, Brooke DePalma, and Inez Ferre. Have a great week. We appreciate it. All right, hungry for more opening bid? Of course you are. I got you. I have a new drop of the Opening Bid Unfiltered vodcast now on Yahoo Finance and on all major podcast platforms. I sat down with Wikipedia co-founder Jimmy Wales to get his thoughts on how AI is upending the internet and what it all means for civilization. Really a deep chat here, to say the very least. Coming up, Julie Hyman has you covered on Market Catalyst. Big interview on tap with the Fed's Austin Goolsbee, and Rick Reeder stops by for a chat. Stick around.